Hi, I'm Sandy Kingsley. I'm the board president of a 284 unit condo association in Irvine, California. I first heard about the MODIS program from one of my board colleagues. We had a master policy and we had it for years, and it was just getting really financially impossible to keep it without really impacting the dues of all our homeowners. As of when we met MODIS, which was this past year, over 90% of HOAs had dropped their master policy. I would think not because they didn't think it was important to have it, but for the same reason that I just mentioned a moment ago. It was just impossible financially to maintain the cost of that master policy without doing special assessments or significantly increasing dues. Of the 10% that maintained their master policy, we learned from our attorneys that like 8% of those had no choice because it was written into their CC&Rs. So you would guess that if they were not written into their CC&Rs, you might have 2% actually maintaining their master policy. So that really concerned us before we knew about MODIS. The options that were available were really poor. Really, the only option available to HOAs was the California Earthquake Authority. And it's good to have something, but it really was a very limiting policy. It was an expensive policy. It was not a customizable policy. It didn't cover any common area damage. It really focused minimal protection on the inside of your unit. The California Earthquake Authority was not designed to provide earthquake coverage for HOAs. It was never designed to do that. Then we found out about MODIS, again, through another board member. The more we researched it, the more we were amazed. It did everything that the California Earthquake Authority didn't do. If you have a $600,000 property, you could insure it for that much, or you could insure it for as little as you wanted to cover. But the upside of that is it would cover you not just for the inside of your property, but for the outside of your property as well. And that's very critical because if there's a significant earthquake, it's kind of a shared cost. And most people that don't have earthquake insurance would have to pay out of pocket or try to find a loan. But through MODIS, you could put that in to the MODIS policy so that in a worst case scenario where you have an earthquake, you don't have to worry about the special assessment because you're getting paid from that, from the policy that you have through MODIS. When you compare the two, which I'm encouraging you to do, you will see if you're an HOA member, everything about MODIS is way better than the California Earthquake Authority. So this makes MODIS a perfect experience because it allows people that want the insurance to buy into it. But those that don't want to do it, those that don't think an earthquake is going to happen, they don't have to do it. If you decided you didn't want MODIS in this first year of our association partnered with them, that doesn't mean you can't get MODIS in the next open enrollment period. You certainly can. And by the way, MODIS does work with master policies. So whether or not you have a master policy, MODIS should be in every association's portfolio because it's very customizable and easy to get in.